Hey everybody, I've been asked to do some more technical analysis videos, so I'm going to do one. Somebody asked on TikTok, what would you say to someone who tells you that technical analysis is bullshit? And my response was, that's just like your opinion, man. Like if you don't believe it works and you don't like it, okay. Like I'm not going to try to convince you. You know, it works for me. I've been trading for 10 years. I've been using these exact technical indicators for 10 years. They work for me. So either you're not doing them right or you just don't like them. Whatever. Doesn't bother me. For the people who are interested in how technical analysis works, I'm going to use Luck and Coffee and their chart from last week. So this is Monday right over here, and this is Friday. It's the full span of the week, and I'm going to tell you about all the technical analysis that I use, and I would walk you through a hypothetical. I didn't trade this stock last week, although I have been trading it in the past. So I'm just going to give you a walkthrough of when I would enter hypothetically and when I would exit hypothetically, based on all of the mumbo jumbo, random lines, and bullshit technical analysis. So this is Monday right here, and it's divided by these lines. And these gray lines are pre-market and after hours. If there is a lot of volatility and action over the course of the evening, these lines will be wider. And if there's less, like over here between Monday and Tuesday, there's almost none, so the line is fairly small. And of course, this is the weekend. So what we have on Monday is very low volume. And even though we have lots of breakouts to the upside, the stock really isn't going anywhere. But we do start to kind of have a little bit of a rally into the close. A rally into the close usually means the rally will continue into the next day. Not a guarantee, but that's in my experience. And on the flip side of that, a sell-off into the close means there's more selling to come. So it's something you just want to pay attention to. Luckin is one of those stocks that's on my list, so you're going to say, like, well, how did you find it? How did you know? It's just been a stock that I've been trading for a while. It was in the news. That's how I heard about it with the big scandal that was going on. I put it on my list, and I watch it every day. I just pay attention to the stock, and I look for things like rallies into the close, narrowing of these Bollinger Bands, which are these red, I don't know what color this is, blue and purple. When the lines are very far apart, it indicates a huge trading range and a little bit more risk and volatility. What we look for is a squeezing together of the bands. That indicates that a breakout is much more likely to happen. So I'm watching over here. This looks interesting to me. Something might happen, and sure enough, it does. What we get are multiple breakouts on Tuesday. Breakout right at the open, kind of weak volume. But it still kind of moves a little bit. Now, you have to keep in mind, I'm going to be looking down a lot because I'm going to be using my calculator. You have to keep in mind that this is an $8 stock around this point. So 1,000 shares would cost you $8,000. I'm not buying 1,000 shares of this stock. In higher stocks, usually any stock that's over $5, and say under, I don't know, 20, I'm buying around 300 to 500 shares, just to give you an idea of what I do. So in this example, with Luck and Coffee, I would probably have purchased 500 shares. So that's where all my math is going to come from, all my profits or potential losses, and I'll walk you through a hypothetical now. So we have a breakout here at the open, and then we have two more in the afternoon. I like back-to-back breakouts. It indicates that the momentum is continuing. By the way, you can see over here, I use the 5-minute chart. I like the 5-minute versus the 1-minute chart, although I do jump back and forth between them. I like the 5-minute chart better because it shows the continuation of momentum and a rally. On the 1-minute chart, sometimes you might see a breakout and think, here we go, we're having a breakout. But really all it is one investor coming in and throwing down a huge amount of money, pushes the stock up, it breaks out, but there's no real sustained rally. I want a sustained rally, which is why I like the 5-minute charts. And when you have the 5-minute charts, you can get back-to-back breakouts. We get back-to-back breakouts here, and I jump in at 867. That's the hypothetical. I'm getting right here on the second breakout, right here, and I'm going to buy it. You can see, if you go all the way to the right of the screen, you can see 867, where all the dollars are right here. I'm in at 867. Let's do some math here. Actually, let's write it down so we can have all these numbers set up. I have purchased, hypothetically, in fantasy world, 867 times 500. It's cost me $4,335 to buy my 500 shares at 867. Now, if you follow me on TikTok, you know that my goal is to make anywhere from $200 to $400 per trade. So when people say to me, how do you know when to get out of a trade? The way I know how to get out of a trade is I've hit my goal. That's all I care about. My goal is my goal. I hit it, I make my money, I move on. If it goes a little higher, bummer, of course, it sucks, but that's the goal. Now, it doesn't mean that just because I'm at 200, I'm out. I pay attention to all the technical analysis, and I make my decision from there. So, let's see here. We have all these breakouts. We have medium-sized volume. And what I'm looking at is to make sure that this stock stays above the 20-day moving average. That's the blue line in the middle. It's more of a psychological indicator on Bollinger Bands that indicate a potential reversal. So when the stock crosses this blue line like it does right here, I start to think, okay, we might be having a sell-off here. Might be. Doesn't mean that I sell it the second it crosses this line. It just means that I'm now actively paying attention to it. As opposed from like jumping around from stock to stock and looking at everything and going into the kitchen to get a drink. When I see this crossover, I stop and I just laser focus, I watch it and I wait. And what I wait for is a breakout to the downside. Once it crosses this support line, which is the bottom of the Bollinger Bands, that is a potential selling opportunity for me. We'll go into that a little later though. So what we end up having is it's pretty steadily above the 20-day moving average. Now, if we were having a very strong up day and it was steadily across this 20-day moving average, even if I hit my $20 or $200 profit, I might not pull out. I might stay in and just wait for a reversal crossing over that 20-day moving or crossing below the 20-day, or another indicator like oversold on the relative strength index, or overbought. I mean, overbought, not oversold. So, what we have is a little bit of a rally into the close. Not much of a jump on the day, so I'm not going to sell, right? Let's see here. We close. What do we close at? We close at around. What's the closing price here? $9. $8.91. So I'm $8.91 minus $8.67 times my 500 shares. My profit is $120. Not selling. I'm gonna hold into the next day. And sure enough, I wake up, I go to bed, I wake up, and boom, huge jump right at the open. Huge jumps right at the open often make me nervous because I think there's going to be some big profit taking and the stock is going to drop just as quickly as it goes up. It's going to drop. I confirm this by looking at the overbought territory on the relative strength index, which is this middle chart right here. So you can see that this stock has crossed over the 70 line. This indicates that the stock is now overbought. There's too much volume. There's too many buyers. It's going to reverse course. Maybe. This is where I sell, right here. Because I'm expecting it to reverse course. Now you might be thinking this is a hypothetical scenario. Why don't you just lie and say you sold all the way up here? Because I'm showing you what I would do in this scenario. And in this scenario, right at this big jump right in the morning, I'm out. So let's say it hits 942 and I'm in at 867. That's an increase of 75 cents times my 500 shares is 375. I'm taking it. I'm taking it because we have a huge jump right at the open and we are overbought. That's all I need to know. I'm out. I lock in my gain. I'm going to write it down. I lock in my gain, 375. I'm very happy with this. And I'm also expecting that it's going to reverse course, and if it hits a new support line, which could be somewhere around here in the 890s, if it goes from 950 to the 890s, I might get back in. But I'll wait and I'll look to see what these do. Because if we get into oversold territory, I'm definitely buying back in. right? I'm expecting it to go like this. Boom, straight down. But it doesn't. So am I kicking myself? Am I upset? A little bit, of course, because this is a job about making money. But I would rather be wrong and lock in my profits than be right out of dumb luck. I'm expecting this thing to reverse course. It doesn't. It goes higher. In fact, it trades flat for a little bit and then it starts to move. So your follow-up question is, do you get back in? And the answer is yes, I do, but not yet. I'm waiting for something to happen. I'm either waiting for a breakout again, that I can jump in for a quick trade that momentum, trade that very quick rally, or I'm waiting for a breakout to the downside. So I'm watching. And what happens? It crosses this 20-day moving average. Excellent. Now I'm intrigued and I'm watching and I'm waiting because I'm expecting a sell-off is going to happen now. And what's going to happen with that sell-off is it's going to cross this support line on these Bollinger Bands. And when it does, the stock is going to have free fall. It's going to hit maybe support, which would be down here, or it's going to hit oversold territory, anywhere based on how sudden the surge of volume is in the selling, I mean. That's what I'm waiting for. I'm waiting for a big sell-off so I can get back in at a lower price and then ride that little bounce back up. But that doesn't happen. Instead, it breaks out almost to the downside and then immediately reverses. So what am I watching for now? Either it's going to trade flat and I'm done, I'm not interested until it does something significant, or it's going to have a breakout. If it has a breakout, I'm getting back in because what did I say? If we have a rally into the close, chances are that rally continues into the next day. And this is interesting to me too. It shows that there's enough interest in the stock, people aren't selling it. They're holding, right? Some people are locking in their profits. You can see some selling happening here. But most people are holding. I'm intrigued by this. And into the close, people are coming back in and they're buying. And those people include me. I buy at 10.05. Right into the close. 10.05. Another 500 shares. Let's see what it costs me. 10.05 times 500. 5,000 bucks. I'm back in with another 500 shares at $10.05 right into the close, expecting, first of all, look at this huge volume. That's a nice sign for me. And we don't enter oversold or overbought territory. I keep saying oversold, but I mean overbought. We don't enter overbought territory into this rally. Boom, market's closed. By the way, this is about an hour, I think, maybe a half hour, hour until the close. So I buy it, we trade flat into the close, and then we wait and see what happens tomorrow. And then, sure enough, another rally right into the open. But this time it does what I was expecting it to do the other day, which is a big bounce and a sell-off. And that's why when we have big bounces in the open, I sell and I lock in my profits. So here we go again. Boom, big bounce right into the open of the market. And just like yesterday, I sell right here at 1064. So let's do some math. 1064. And by the way, why am I selling at 1064? Why am I not holding out? Why am I not being greedy for more money? Because here we are, overbought again. This is an indicator that the stock is going to sell off. So people who say technical analysis is bullshit, here's an example of it working. We've got huge volume, a big breakout right at the open, a rally into the open that followed over from the next day. And we also have my 10 years of experience that say this is pretty standard. Where is it? I want to highlight this. See this big red line here that highlights when I put the cursor on it? Right there. This is what usually happens when there's a big bounce right at the open. When the stock rallies strong right into the open, like 9:30, ding, 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 stock shoots up, it usually reverses course right away, as it does right here. That's my experience. So when we have a big breakout right at the open and a big surge of volume, plus we are showing overbought down on the relative strength, I'm out. So I'm out at around 1064. What was I in at? 1005. That is an increase of 59 cents times my 500 shares, 295. Now, right, my goal was to make 200. I made a little bit more. So 295. And if you remember from yesterday, I had made, or the day before, I had made 375, $670 in 2 days. And I sell right here at the breakout into the open because I'm expecting a reversal, which didn't happen yesterday but happened on this particular day. So the next question is, are you going to get back in again? No. Here's why. On Monday we opened at 8:15. Monday, Tuesday, Wednesday, Thursday. First of all, the week is almost over. Second of all, we've had a humongous run. This is $2.50. Okay? This stock has gone up $2.50 in just a couple of days. That is over 30%. So think about that for a second. You've got a stock that's $8.15, pops to $10.65. It's a 30% plus gain in a few short days. $2.50 in a few short days. If you had done a swing trade on this stock and you had purchased 1,000 shares, you'd be up over $2,000. So why am I not swing trading this stock? Because these markets are very volatile. They drop at the dime of a hat. They drop at the dime of a hat. That is not the right expression. They drop at the flip. Doesn't matter. You know what I'm trying to say. The markets are volatile, okay? And I don't want to take chances. Yes, I could have potentially had a $2,000 profit and I only got $675. I only made $600 and something on this when I could have made $2,000. But we are not in a really strong bull market. We're in a very choppy market right now. Markets are up huge, down, up, down, up, down. We've got a lot going on right now. We've got coronavirus. We've got this election. We've got the inauguration next week. We also, this is, depending on when you're watching this, this is Martin Luther King weekend. So we've got a 3-day weekend coming up. We've got this growing domestic terror threat happening in our country. So there's a lot going on right now. And we're not also sure what the president's going to do. So there's a lot of reasons to be on edge. And as a trader, I'm not trusting these markets. I don't trust anything that's happening right now. Yes, I could have had a bigger profit. I'm okay with a smaller profit because it means that I'm getting my money back faster, right? I'm not putting it in and holding it and waiting. I'm able to jump in, jump out, make some money. I make, in this scenario, in this hypothetical, $675 in a week on just the one stock. Now, if you follow me on TikTok, you know that I trade others. I don't just trade one stock per week. I'll typically trade anywhere from 3 to 7 stocks over the course of a week. Not all of them are winners. Some of them are losers. I also use technical analysis to get out of a loss before it becomes a bigger loss. I'll do videos on that later. So, your question to me is, when do you get back in? Are you going to make another trade? And I have a lot of reasons for that answer being no. 1, 30% rally in a few days. 2, all the tensions going on right now. 3, we're heading into the weekend, right? So I don't want to be tying up funds over the weekend, especially right now with this, I live in Washington, D.C., so it's a little on edge here. And I'm also expecting a pullback now, because look at what has happened. So it's funny to me that I have some friends who will send me stocks that have had like massive run-ups, right? The stock is up 30-40% in a couple of days, or even in one day, and they're like, do we buy tomorrow? And it's like, well, maybe. Let's look at the technical analysis first. We don't just buy because it's up a lot yesterday. That's not a guarantee that it's going to go up a lot today. Just because the stock went up 40% on Monday and you missed it doesn't mean that it's going to go up 40% on Tuesday just because you really wanted to, because you missed out on making 40% yesterday, so you're hoping you can replicate it today. That's not how any of this works. So when people come to you and say, like, look, this stock is up 30%, my initial thought is it's going to probably pull back here. There's probably going to be some big profit take. Imagine if you bought at $8.15. Imagine if you bought even lower. Imagine if you bought a month ago when it was 7 or 6 or 5. And you've been holding it all this time, and now you've doubled your money essentially in a few short days after holding it for several weeks or months. You might be inclined to lock in some, if not all, of your gains. Sure enough, when you factor in everything that's going on, big rally, heading into the weekend, there's going to be a sell-off, and it starts to happen, right? What do we see? It's crossing this 20-day moving average. Uh-oh. But not only that, you see this white line right here? This is the 50-day moving average. And this yellow line is the 200-day moving average. And the way these moving averages work is they kind of smooth out all the volatility. So if you look at this chart, it's up, it's down, it's up, it's down. But if you're trying to see, hey, where has the stock generally been going over the last 200 days? Or where has it generally gone over the last 50 days? Short-term traders tend to use the 50-day moving average first, whereas swing traders tend to use the 200-day moving average. But I have them both on my chart. When the stock crosses above these lines, it's an indicator that there is a rally coming. And sure enough, we have all these breakouts happening, and here's this 200-day moving average. Look, we cross above it right around here. And look what ends up happening to the stock. Huge rally. We also cross above, where's the 50-day? It's a little harder to see. We also have the 50-day crossing above the 50-day somewhere around here as well. And look, boom, we're off. So now the next thing we're looking for is when does it cross below? That's when we might be having some selling pressure. And we cross below it a little bit here, but not really. But then we really cross below it right here. Uh-oh. This right here has a lot going on, right? For the first time in a couple of days, we are now consistently under the 20-day moving average. That's this middle blue band. That's not good. We also have a breakout to the downside. The first real serious breakout to the downside happens right here. You can look at this one too, but there just wasn't enough volume and it kind of reversed course right away. This one right here. Uh-oh. We're getting a breakout to the downside, and it does have a little bit of what you could call a rally. Although I wouldn't be buying this turnaround because it's weak volume down here. Even though it is oversold, you would have to buy an awful lot of shares at 10.14 to make any real consequential money selling here at 10.46. It's just not worth it for me when you factor in the huge run-up that we've had. This is like a last gasp breath to me. This doesn't scream, oh, the rally is continuing. This just is like, you know, in that fight where the guy like gets that like second wind just for a little bit and then he gets knocked the fuck out. That's what this reminds me of. And boom, into the after hours we sell off pretty hard. We cross the 200-day moving average. It's the final nail in the coffin on this one. And we have a huge sell-off right into the open. Look at this. This is actually pre-market. I don't think markets have even opened at this point. This is Friday. We have a huge drop all the way down to $9. When the markets finally open, there's enough buying that it kind of recovers a little bit. Not really. And it tries, yeah, look, multiple breakouts to the upside, but the volume sucks. And it's just not working. And then we get, look, another crossover of the 50-day, and it's going to push lower. So I don't know if you heard that, but there was something on my ceiling. So anyway, that is how I use technical analysis. That is a little bit of a walkthrough on this one stock. This is the moving average, convergence, divergence. I don't use this bottom one a lot. I only have it on my screen because I like the way that it kind of makes the screen look. In other words, if this wasn't here, everything would be stretched out a little bit bigger, and I like the more compact look. That's the only reason I have this here. It's like a space filler. It lags behind. And so you might have a breakout, and then like a half hour later, it's like, oh, there's a breakout. And you're like, yeah, I know. So it lags behind. That's why I don't really use it. It's just here to fill space. I think we covered it all. I will do more videos like this because I get a lot of requests. People want to see this technical analysis walkthroughs in a stronger, consistently bull market that was less volatile and had less stuff going on in the world. I probably would have done a swing trade. I probably would have just held. Although there are a lot of times over the course of that swing trade where it's hitting oversold territory. But as long as we don't get any breakouts to the downside, you can let that stock run, right? Remember, we're in here at 8.15. So we've got room for the stock to go. What we're looking for are breakouts like this. This is where we could exit. We could have gotten in on a swing trade here at 8.15 and out at, let's just say for the easy math, at 10.15. That's a $2 gain on 1,000 shares. Would have been $2,000 on 500 shares. Would have been $1,000. In a safer, more reliably consistent market, I probably would have done a swing trade, and I would have kept my eye on a breakout to the downside, which is right here at when I exit the position. So there you have it. I hope this video was helpful. If you liked it, if you want to see more, if you want to suggest a stock for me to do some technical analysis, leave a comment below and I will do that. Please like and subscribe. You can click the bell and the little notification and the subscribe down below. Thanks for watching. Have a good day.